All right, Teddy, I'm excited to dive in with you, man. I'd love to hear, maybe we'll kick it off with where you first came up with this concept, which is relatively new, I believe, Notional. What were you doing at the time when Notional came into the world, and what was the inspiration or the spark for the concept?
Yeah, sure. So I'll actually take it one step further back. So
Sure.
I started my career, I was an interest rate swap trader. So I was a trader at a big investment bank for about 4 years. And that's where I sort of learned about interest rates and trading and all that stuff. And then I left that job to trade crypto. So I left the bank in maybe 2018, and I was trading crypto for a while, and that was cool. And basically I thought crypto was really cool. I thought working for a bank was kind of boring, so I wanted to get out of that and sort of into crypto. And trading was a way for me to, it was like a natural step, right? It was a way for me to get into crypto in doing something that I understood and that I knew well. Because I just really crypto was just super exciting. I mean, this was at the 2017, the big spike up, and there's all the fanfare and hoopla around that, and it just seemed like the absolute polar opposite to working in a bank. So
and how old were you at that time?
Yeah, that's a good question, man. How old was I? I was, I guess, 27.
Yeah. Okay,
27.
so you're probably working with people who are quite a bit older, and you envision their career paths and what they're doing, and you're thinking to yourself, hey, the world's just going to be different, so why jump on the old train?
I think that's right. What I tell people a lot is that when I was working at a bank, everything was still done human to human. So when I was a trader, I was trading with other humans over the phone, which to me just felt like just extraordinarily backward,
Yeah.
It's and I felt like it just didn't, as a young guy, why do you want to get in the thing that is on the way out? That's how it felt.
Yeah.
So I was looking to get over to crypto. And so, as I said, I was a trader for a little while, but I always wanted to start a company. And, towards the end of 2019, this DeFi thing was sort of actually starting to do something, which, after a very long crypto winter was great, because basically no crypto company had any sort of success, found any sort of traction at all. And DeFi was actually finding a little bit of traction. And so I wanted to be a part of it. And, so I was working in London this whole time, and then I flew to San Francisco to start Notional. And I actually met my business partner the first day in San Francisco at a hackathon. So it's really just kind of a stroke of luck. That's an interesting story.
But
yeah.
Did you know that you knew precisely what the model was and what you wanted to build, and then that's why you flew to SF? It's kind of like a work in progress.
Well, I knew the idea. I knew that I wanted to do Notional fixed rate borrowing and lending protocol. I knew I wanted to do fixed rates, but I really didn't know how and but I did know that because I'm the trader finance guy, and I needed to find someone that could actually write the code and build the thing, because I was not going to be able to do that. So I went to San Francisco because that's where everybody was, and I knew that that's where I'd find that person, and I did.
So fixed rate trading. What were you doing prior? When you say swaps trading and people are trading over the phone, what are people trading over the phone? What did that landscape look like?
Actually, I mean, to be honest, it was actually pretty I enjoyed it. It was pretty fun. So basically, the way it works is I don't know if you've ever seen one of these trader setups, but you have 8 monitors, right? And then you're working with a bunch of other traders and salespeople, and everybody's yelling all the time. And you've got little voice box on your desk that's right in front of you. that connects you to all the different brokers, and they're just shouting prices at you all day. Like 10-year Eurodollar, 37.5 bid, 37.5 at 38.5, like it's just all day. People are like shouting prices at you. Right. And then, you go and talk to them like, oh, I'm mine 38.5, it's like, that's what it was like. It is actually, I as much as I wanted to change and get into the new thing, I really did enjoy it. Like it was fun.
Did it feel, I mean, that sounds like sensory overload. So people are just shouting through speakers on your desk prices all day long. What's the point of the audio as opposed to just having it displayed on the screen? Or you just have 8 screens and people yelling prices at you? You have both. And it's, it's different though. It's like some things were totally electronic, and that's where you see the prices on the screen. And there are other things like my primary product, which is very illiquid. And so like it's all done human to human. And so that's where these guys shouting prices came in, because the only people that traded this product were like, our desk at our bank. So me and my boss, and then like our counterparts at like 8 other banks, and like, that's it. What's the product, or the product that you're trading?
I guarantee you will not have heard of it. It's called cross-currency basis swaps, which it's like, even for finance, it's extremely esoteric.
Okay. I really want to understand it though, just out of my own curiosity. So cross-currency basis swaps. So I'm picturing like USD to the Japanese yen, right? Japanese yen. So they are cross-currency basis swaps. So then there's some rounding or some extra. Okay, this is what you tell me what it is. I honestly don't know.
Okay. So basically, it's like an interest rate swap, right? Where you got a fixed leg and a floating leg, but the difference is that the 2 legs are in different currencies.
Oh,
so you'd have like a dollar leg and a euro leg, for example. And it's kind of complex, but what the swap means, like what this thing means, is how much people want to borrow and lend in one currency versus a different currency. So, so like, I think like, I'll just go through a quick example of why people use this. Like basically, like, let's say you're Ford and you want to borrow dollars. You can go borrow dollars from US investors, right? But on the other hand, you have a lot of people in Europe who want to lend to Ford. And so they're willing to like lend to you at good rates, but they want to lend you euros, right? So what you're going to do, what Ford is going to do, it's going to borrow euros from these European investors and then execute a cross-currency swap with the bank, where essentially the bank assumes Ford's obligation to these European lenders, and then Ford gets dollars from the bank and pays the bank dollar interest rates. Right? So
I see.
So that's why the thing exists, and it's like a very niche product. Yeah,
that's interesting, because obviously Ford can't collect euros in their own U.S. bank account. Eventually, they have to transact those into U.S. dollars, and so that leaves a inefficiency in the market, where it's like, well, where do you get those U.S. dollars? How is that transaction mediated? And
how does it all actually work?
Right.
Yeah.
And I think of your position as you being the trader, as your opportunity where you make your money is on improving offering liquidity for people who want either US dollars or euros or Ford shares, and you're taking on some risk in that, but it's calculated risk, and in exchange for that, people have added liquidity. Is that sort of the right way to think about the value provided by traders?
I think so. Yeah. I mean, it's basically like, you're giving both sides what they want, right? So Ford gets dollars, they get to pay dollar interest. The European investor gets to lend euros and earn euro interest. And you're the guy that stands in the middle that like manages that mismatch, right? So that's like your role as the trader working at the bank.
Got it. All right, I'm with you. So now you see crypto and you think that the same sort of high level model has to exist. There's people who want different things and different currencies, and then there has to be a place where people can get what they want. They get US dollars or get another cryptocurrency, and who's going to manage that, or how is that going to work out? So at that time, was the DeFi, what was the state of the DeFi like market, I guess, so to speak? Both, like I'm thinking Celsius and Nexo, like the large kind of centralized crypto exchanges, and then the decentralized exchanges like Ava or some of the other ones. At 2017, they're pretty new at that point,
they didn't
right?
exist.
Yeah, they didn't exist. Okay.
They basically like didn't exist at all.
Yeah.
I think. I mean, I only really heard, I think the first one was like Maker, which was, 2018 or something. I'm not sure exactly, but I only started hearing about DeFi once I had left the bank and I was like doing my crypto trader thing. And that's where I sort of started to hear about DeFi. And like at that time, it was absolutely tiny. There was like, a couple $1 million or something of TVL in the entire system. And like, obviously you flash forward today and there's like $100 billion in, right? So it's massively grown, but at that time it was super small. But to me, it was like basically what it was doing. It was recreating that whole system, right? But without like any people, basically. Like that was the promise of DeFi. It was just like taking out taking out the human element, where it's replacing this system that, relies on companies and English language law and people, and just replacing it with like a machine, and like, and that was always how I felt about it. And it's how I feel about it now. And obviously it's a lot further along that path than it was then, but it's still got a long way to go. But like, that is, in my opinion, like what the DeFi thing is doing.
Yeah. Interesting. So what were some of the key decisions that you needed to make early on in deciding how to build this product, this platform?
Yeah. So, it's kind of funny. So when we first started it, so my business partner's name is Jeff, and he was an engineer and an engineering manager in Silicon Valley for about 10 years, primarily at a company called Atlassian. And so, at the time, like back at the beginning, I knew like essentially nothing about technology. And like, and, now I know a little bit more, but like, it was really important, I guess. So as a finance guy, you tend to take for granted the tech side. You tend to think of it as like, okay, well, if you know how to do it, then you just do it and it works. Right. But like you see, when you start building like a cutting edge new technology product, that like actually just getting the thing to work and do what you wanted it to do is like really hard. And you absolutely can't take it for granted. I don't know. So that was something that I learned is an interesting, because I think just as a guy working in finance, you tend to just take that stuff for granted.
Yeah.
Which is something you can't do. Really.
Yeah, particularly because you don't, like anything, I suppose, when you don't see behind the scenes at how much effort goes into building something, you just assume that it's straightforward or that it's maybe simple to do. How many websites we open up and don't understand that somebody's, mortgage might be on the line to hire developers to build this idea. And it's not, although there are more no code and simple frameworks now that allows people to get up and running. To your point, when you're on the cutting edge and building something that can't be, drag and drop built, it's not like an e-commerce store, then you really are making important decisions on what technology to use for scaling challenges, security challenges, which I'm sure you think a lot about. And so what did you end up choosing? Do you know, as far as tech stack or?
Mm-hmm. Yeah, well, so we build on Ethereum. So the smart contracts are written in Solidity. So Ethereum was the choice from very beginning, and at that time it was the obvious choice. It was where everything was happening.
Right.
I think Solana wasn't even on the map at that time. So for your listeners, Solana, if you're not aware, is sort of an Ethereum competitor right now. But actually, kind of to go off something you said earlier. So, you're asking, what early decisions did we make? And so kind of what I'd been talking about a little bit was that we had to, so I came first when we started it, I came with a design that almost like recreated what existed in traditional finance, right? It was that was the first way that we tried to do it. It was essentially like a full recreation of what existed in the prior system. But then you run up against all these sort of technological constraints that I had failed to understand before, trying to build something. And just the fact that block space on Ethereum is extraordinarily expensive. And you really, really, really can't. There's a lot of things, the constraints are just really harsh, so you have to make sure that what you're doing is practical from a technology standpoint. So we had to basically completely scrap that design and build the thing in a new way that was sort of more blockchain native. I think when we switched from an order book model, I don't know if this makes sense to you, but when we switched from an order book model to something on an automated market maker, that was what we were doing. We were just chucking out the way things were done in traditional finance for something that was more blockchain native. And really, I remember at the time, I felt it was so weird. An automated market maker is it's it's a liquidity pool. You put all this capital into it, and it's like a little robot that makes markets all on its own with no human input at all. And I remember thinking at the time, back when these were so new, that I was how could that possibly work? I was it was this blasphemy, but then we embraced it because you have to if you want to make something work on the blockchain. I don't know. So I think it's kind of interesting.
Yeah, and so now there is a automated market maker where there's, if you tell me how this makes sense to you, but if there's on the buy and sell side, there's orders that are accumulating. So in the order book approach, the old school way is those order books are accumulating like rows in an Excel database, and then vice versa on the sell side. And that the human would be responsible for matching those up previously, saying, okay, this goes here, this goes here, these guys can do a trade. Now, because it's completely on chain, that is replaced for a consolidated pool. Instead of individual trades, there's a pool, and then that pool allows excess liquidity. Or how do you kind of think about the advantages of the on-chain? Why is it faster, more efficient than previously done?
So it automates the quotation. So when you're talking about an order book and you've got a market maker who's placing orders here and there, essentially the way that works is you have to constantly update your orders, right? Because the price moves. So every time the price moves, well, I'm no longer a 54 bid, I'm a 55 bid now, right? So you have to constantly manage that. And what an automated market maker does is it automates that process. So you put your capital in that you're going to market make with, and your quote is automated. So you're not doing this stuff. It's just automatically moving as the market moves, right? So and the reason that's so important is because when it costs and gas prices now are insane on Ethereum, but if it costs $100 to provide liquidity, you can just imagine if you have to spend $100 every minute when the price moves so you can update your orders. I mean, it's completely impractical.
Right.
Right. So it's really the automated market maker thing. I wouldn't say it's a categorically better way of doing things. I think that's not true. It's just, it is suited to an environment where storage and computation is just exceptionally expensive compared to how it is in the sort of traditional world.
Awesome. Where is the project now? So you guys have raised, how much have you raised, and how do you measure progress in terms of market trading volume or other things that matter?
Mm-hmm. So we raised 2 rounds, a seed and a Series A. We've raised $11.25 million in total now. And we have launched, so we sort of launched Notional V2 about 3 months ago. And since then, we've got about $460 million in assets on the protocol, which is pretty good. And we've done about $260 million of actual lending and borrowing volume. So I think we've got a long way to go. But I think it's really good early progress.
Yeah. And who are the people, I guess, how do you understand the people who are trading here? Is it mostly individuals trading really small amounts, or is there some consolidation for practical business purposes? Have you been able to parse out that kind of customer information or user information?
Yeah. So, for one thing, so things are generally anonymous on the blockchain. So, you see an address interacting with your system. You don't necessarily know who that person is. But that doesn't mean that you can't know some things. So for example, we see a lot of sort of high dollar value usage. So, I think something like the average account, and this is skewed because we have a few really, really, really large accounts, but the average account on Notional is something like $500,000 or $600,000 in size, right? So it's like, it's not really small users using Notional. It's generally very large users. And the reason for that is because because of the gas fees in the Ethereum blockchain. Right. So if it costs $100 to initiate a loan, it's a very high barrier for sort of like how much money you have to use before it becomes economically viable.
So maybe a way to think about it is that it's not necessarily true that you're uniquely attracting high net worth traders. It's just that the low volume trades just aren't economically feasible. So we're just missing a large part of the potential market, which we could get to that, but I'm sure that that is being worked on by a lot of smart people. Before we do talk about Ethereum, though, I'd love to get your take on the landscape of DeFi. When you sort of think about other providers, platforms, exchanges out there, how do you segment them? Do you think about it as, okay, these are the organizations, the companies that are funded, they're run, they're centralized, regulated. Then there's completely open source, decentralized exchanges. Is there other categories, or how do you parse out the landscape?
Yeah, I think when we're talking about DeFi, we're talking about protocols. So, something like Coinbase or a BlockFi, like I would not consider to be DeFi. So, generally, when we think of DeFi, we think of on-chain protocols. So something like Notional or, Compound, Uniswap, Aave, these kinds of names. So where there's not like a human being that's administering the system, right? And like everything is built on smart contracts.
Right. And of the DeFi protocols you named, how do you compare those? So where do you sort of stack rank the niches in the market? Maybe do you think about it in terms of speed, liquidity, user experience, maybe something to do with rates or stability or other things that play into, say somebody's just going to make a decision as to where they're going to start doing their lending and borrowing. What are the implications or the attributes of different exchanges?
Yeah. So I think that when it comes to lending and borrowing, so when it comes to I've got some assets and I want to earn a return, right? Or I want to borrow against my assets. Really, the way that I segment them is by risk. So I think that, there are some sort of, they're the kind of the OG protocols, so the OG lending protocols like Compound or Aave, that have been around for a really long time and haven't been hacked, haven't had user funds lost, right? And have just been working for a really long time. And those protocols are like the lowest risk, right? And accordingly, you get the lowest return, right? So right now, it's something like if you want to lend your USDC on Compound, the rate of return you're getting is like 2%, right? Which is, it's a lot better than a bank, but it's also like not that high. But it's a risk spectrum, right? So it's like that is the least risky, that's the most safe. And then kind of as you move further along the spectrum, you get higher rates, but you get, more risk too. And you generally get more risk because you're doing something a little funky with your money, like you're using some leverage or some stuff, or maybe it's because you're using a protocol that's new, like Notional, and it doesn't have the same security track record just because it hasn't been around for as long, right? So like currently on Notional, for example, our USDC rates like 8.5%, 9%, right? So a lot higher than 2%, but you're taking more risk because Notional has only been here for 3 months and it doesn't have the 2-year history of not getting hacked.
Right.
We have to sort of build that up over time.
Now, on the borrow side, why would someone, presumably it would cost more to borrow, say, USDC on Notional to justify those higher rates on the lending side. Why would that be true? Like, why would somebody pay more to use Notional rather than Aave or Compound?
Yeah. So basically, there's kind of 2 reasons here. So one is that on Notional, we take certain kinds of collateral, like we take Notional specific collateral types that earn high returns. Mm-hmm. So what that means is that like you can put your capital into Notional, provide liquidity, and earn something like 10%, and then you can borrow against that on Notional. So it's a way that you can like, lever up on the returns that you're earning on Notional, and you can't borrow against that asset on those other platforms. So what that has meant is that like, if you're earning a lot on that asset, it does make sense to borrow at a higher rate, because you're earning the returns and you're getting the cash and you're paying less on your borrow than you're earning via providing liquidity on Notional. So that's one reason. And then another reason is just that, ultimately Notional is a different product, right? So when you borrow on Notional, you're borrowing at a fixed rate, right? For 3 months, 6 months, or 1 year, as opposed to a variable rate on these other platforms. And the variable rate is really volatile. And, a lot of sort of Notional's users really value the certainty that the fixed rate gives them.
On the fixed rate, I would imagine that that's something other protocols would like to do. Is there just a fork in the road with how the protocol is built to not allow or to allow fixed rate, or is it true that other protocols currently do allow fixed rate and you guys are just doubling down on the fixed rate, fixed term protocol? And how would that work? I guess also I'm so curious how fixed rate works behind the scenes to make the finances work out, right? Because there's a reason variable rates exist. When the prices go up, there needs to be an increase in the interest rates. So how does it work from a finance perspective?
Okay. So what I would say is that the fixed rate thing versus the variable rate thing, it is a completely different protocol construction, right? So it sounds like it's not that different, but it really is. It's not something where these variable rate platforms, they never thought of it.
Right.
It's that's not it. Right. It's a completely different design. And so the way it works is the core concept in Notional is called Fcash. And this Fcash thing is like a zero coupon bond in that it is defined by a currency type and a maturity date. So like June 1st, 2022, USDC, that is an Fcash token. And I can transfer that or trade it, do whatever I want. And on June 1st, 2022, I can redeem it for 1 USDC on Notional. So you can think about it as it represents USDC in the future on a specific date.
Right.
And yeah, so the way we enable fixed rate borrowing and lending is by allowing you to trade between USDC today and USDC in the future, right? And the rate at which you make that trade implies a fixed interest rate over that period of time. So does that make sense?
Yeah, that makes sense. Yeah. So in the future, it's an agreement or a contract saying in the future at this date with this currency, this will be the price. And once that's set, then that's set. That's the terms of the agreement. So anything could happen to the price. If it's USDC or Ethereum, it could go up or down. But on that date, that's what that agreement will be worth.
Yeah. So it's like I'm giving, like if I'm a lender, I'm selling 100 USDC today. I'm giving you 100 USDC. I'm giving Notional 100 USDC. And in return, I'm getting the promise of exactly 105 USDC on June 1st. Right. So like that is the thing. And so the whole of Notional is about ensuring that you get that promise back and making sure that there's liquid markets for you to trade between USDC today and USDC in the future.
And would you say that this is the same thing as I think of futures trading as being this concept? Is it the same concept, just on chain?
I mean, so like it's similar. It's related. Yeah.
Because futures would be some price at a future date that somebody has the option or the agreement to buy. Which sounds very similar to what you're describing and how you guys have constructed the protocol.
Yeah, it's similar.
Yeah.
Is what I'd say. Yeah.
Interesting. All right. So I'm with you. So can you give me a quick example? Say take Ethereum, just because it's a little bit less familiar, I think, than the price fluctuates relative to USDC. So you currently, I believe, you offer 3 different currencies: DAI, Ethereum, USDC. Maybe 4.
And Wrap Bitcoin.
Right. Okay. Wrap Bitcoin. So taking Ethereum today, somebody comes in with $100,000. They want to make interest on it. They say, let's instead of calling it $100,000, let's say they come in with 10 Ethereum. They come on to Notional. They probably go through some KYC process to set it up. Do they have to do that? Or no?
No, they don't.
Okay.
Notional, like most DeFi protocols, is totally permissionless.
Anonymous.
So there's you don't need to KYC. Yeah.
Fantastic. So they go in. You submit a request for that. You say, "Hey, this is what I'm going to put up on the exchange, on the protocol." And is there a typical time period that it would take, or is it relatively instant?
So it's basically instant.
Yeah.
So you can just go on the website and you bring your 10 Ether and you get to pick. Like for Ether, there's 2 options right now. You can lend until the end of March or lend until the end of June. And the website will tell you exactly how much Ether you'll have at the end of March or the end of June, depending which option you choose. You press go and you've pretty much got it. Like it's instantaneous. I mean, it's something that's really cool about, DeFi in general is that like, if you can get over the sort of like paying the gas fee and doing all that stuff to interact with Ethereum, it's like, honestly, it's a lot better. Like, cause you don't have to talk to anybody. You don't have to like fill out form. Like there's none of that.
Yeah.
You just interact directly
Right.
with the financial system.
Right, right. How do you feel personally if you're thinking about the comparison, say for somebody who's getting into this, between you say you're convinced on crypto and you want to do lending or borrowing, but say lending. How do you consider the trade-offs between, say, Nexo, Celsius, some of the centralized crypto exchanges versus DeFi?
Yeah, so I think the kind of what we just talked about, the user experience thing is very different for both of those. So and it depends what you're interested in. I think, like the Nexo and Celsius feels a lot like just like a regular bank. It feels a lot like if you want to buy a CD or something,
Right.
It's the same, like it was built to feel that way, right? Now this DeFi stuff, like as we just talked about, is totally different. Like there's no opening an account, there's no anything. Like you're literally connecting directly to the financial system, and you do it, and you don't talk to anybody. You just go straight and you do it directly, which is like it's faster. I think it's easier. It's also very intimidating to someone who's new, because it's like, I mean, it's not the way like the regular sort of system works.
Yeah.
So it takes some getting used to for sure.
Yeah.
But like, I think, so that's just the user experience side. The other side is like, and what I think is the real promise of DeFi, is that because you're interacting directly with this financial system, you're not paying an intermediary to stand between and do that on your behalf, right? So ultimately, you are getting more value because there isn't this little layer sitting in between you and the actual market.
Yeah.
And that's kind of what DeFi is about.
Yeah, that's the exciting part. It's making it more efficient, ultimately, removing the middleman, as in so many business models on crypto. So you guys raised a decent amount of cash, and you have presumably a sizable and growing team. How does the structure of the company work? You're a for-profit company building a decentralized protocol. Do you have a C corporation, and that corporation is to your point here, it feels like a natural segue. What's the business model for Notion Finance Inc., if there is one?
So, so that's like, so what I would say is Notional, like, and this is an interesting conversation to have when we hire new people, for example. It's all a little ambiguous, I would say.
That's always a good response. Well, listen.
Yeah. It's all a little, because I mean, this stuff is also new.
Yeah,
right?
yeah.
So I can tell you what the business model is for Notional, the protocol.
Okay.
So Notional, the protocol, makes money by transaction fees. So anytime somebody lends or borrows, there's a small fee that accrues to the protocol. Right? And so if you own part of the protocol, you, by virtue of that ownership, have like a claim on the fees generated by the protocol.
So wait, can I stop you there? So the fee, when the fee is generated, the fee automatically goes into a wallet. Is that how it's technically happening in the back end?
It's the protocol's reserve account.
Reserve account.
So
okay.
it's like, so it's not going to my wallet. It's not going to anybody's wallet.
Right.
It's sitting with the protocol itself.
Right. But that would be one address, one wallet that is owned by the protocol itself?
It's a smart contract.
Right.
So like the protocol is code that sits on this smart contract.
Right. And now how does that accumulation, that pool of money that's generated from the fees, how does that go from that smart contract to the people who are building it, or, presumably the majority of that, I would imagine, is going towards the people who are coding and building the protocol itself. How does and tell me if that's wrong, but how does that mechanics work?
So it doesn't yet. So right now, like the revenue accrues to the protocol, and it has not yet moved. Now it could. So again, this is where you really got to go down into the sort of like DAO, figure out how all that stuff works. So basically, so basically, Notional Protocol, it's like smart contract system. It has this money that sits within the system, and the system is governed by a governance token, right? So the system can do things if, like, so people who hold this governance token can raise proposals to do things. And then if a majority vote in favor, the proposal is executed. And so, for example, a proposal could be transfer some of this reserve to this address, right? And that, like you might, maybe somebody wants to ask Notional, the DAO, for a grant, for some money, because they want to do something like, they want to do a full security review of the Notional smart contracts, and they want $500,000 to do it, right? So what this person or company could do is go into Notional Governance Forum and post a proposal and say, hey, we want to, conduct a full security review for $500,000. Will you give us the money, right? And then essentially token holders can vote on it, and they say if they want to do it, well, is there $500,000 in the reserve? Could we transfer that to this person that's going to do this stuff? And then if a majority vote in favor, that happens, right? So it's like,
I'm with you. I'm curious how the execution of that works. So the forum, people are just writing. Humans are interpreting this. It's still in like human mind world. And then there's an agreement consensus in human mind world. And then we say, okay, let's turn that into a smart contract and move money. From that point, is the voting done on chain? And so the voting effectively acts as the pathway to move this from what we agree on this forum into the code on the protocol.
Yeah. So you agree stuff in human world, right? With talking on an internet forum. And then what is actually, so then somebody, so the actual proposal that will be executed is code, right? So it is like, it's codified what exactly will execute.
Right.
And then the token holders can vote on whether or not to execute that code.
I see. Yeah.
Yeah. And that's how it works.
So it's a good, I appreciate you explaining that, because I think a lot of people get a little confused between that transition, because there does present the, how would you say it? Like the vagueness between, okay, we agree on this. Well, do you agree on it exactly? Is there a conceptual misunderstanding? Right. And then it's codified, and then the code is reviewed. And that's where people say, yes, approve, and then that code is executed once it hits a certain majority approval rating.
Yep, that's right.
Awesome. And so to date, that has not happened. No money has come out of the reserve in the protocol itself, right?
Yeah, so we're still pretty new.
Yeah.
I mean, we're like pretty early on this path, right? But yeah, that is like, and the other thing I would say is that sort of proposal process that example, maybe that's like not the most realistic thing. It's sort of for illustration, because like what you might actually have in practice, and again, this is not something we've set up, but it's something that we sort of thought about, is like, well, maybe what you have in practice is you have a treasury management like subcommittee, right? And like this subcommittee is like responsible for, processing grant requests and doing sort of other stuff, managing the DAO's finances. And maybe not every request is subject to one of these full on-chain votes, right? Maybe they have a little bit more authority to act without, in like maybe there's a little bit more authority that's delegated to them, right? So that there doesn't have to be a vote every time you want to do anything,
Right.
Right.
Yeah.
So it's like, and to be clear, like we have not set up a structure like that, but like that's kind of the state of DeFi governance at the moment. If people are thinking about how should we do this,
isn't it funny how
right?
To me it's a strong resemblance to democracy. You picture absolute democracy is where we are today in crypto, which is everybody vote for everything, and then majority wins on the voting. Then there's the introduction of a representative government, which is there's too many decisions. I can't be asked every single question that's going on in this protocol as it becomes so complex, and there's so many decisions on allocation of funds. So let's elect somebody. So with this guy Teddy, we like this guy. We all agree, right? Teddy, you're the guy. You now have a certain level of agreed upon authority where you can allocate 20% of the budget to investing in security people and development people and so on. You have a limited set of power, but you are the quote unquote, the elected representative, similar to how we have it in, at least the U.S. So it's kind of it's interesting to me because it's a naturally arising way to handle complex systems, especially of organisms. It's like each individual node or person can't be overwhelmed with 50 decisions per day. So let's elect somebody now to take over that burden. And yeah, it's interesting. I imagine that'll be the way that just about every protocol goes as they hit a certain critical mass, right?
Yeah, I think so.
Yeah.
And it's interesting because we're all like figuring it out right now, just as an industry. Some are further down the road than others. Certainly some are further down the road than us. Like I think one of the the canonical example here is like MakerDAO, right? So they're like, the most fully decentralized, right? There's no corporation, there's no foundation, there's nothing. There's just the protocol, and they have like, so they have these. I think they're called like sub DAOs. I don't actually know what they're called, but like they're these different little like pods, I guess. That like there's a team for each pod, and each pod has like an objective, right? They want to like onboard real world assets as collateral onto Maker. And so that like the community votes for like leadership of this pod and like how much budget to allocate to them and et cetera, et cetera. And then the reviews their performance on some regular basis. And then, so it's like, it's a hierarchical like form of governance. It's interesting.
Yeah.
Yeah.
All right. That's fascinating. I want to dive more into that. But I did kind of take you off on a tangent. So you were telling me you raised 11 million over 2 rounds in that range, and
something like that.
And you're and I was asking you how that company, because that is a company, how that's sort of structured. And you mentioned when you explain this to employees, it's a bit of a confusing topic. Yeah, continue on with that.
Yeah, sure. So we always. So what I would say is that, currently Notional Finance Incorporated, which is our C Corp, we are not profitable. I think that, so I like, our job is sort of, we develop software, and we developed the Notional protocol software, and Notional is profitable, but the C Corp is not currently so. Now, I would expect in the future that that basically, what I would see potentially Notional Finance Incorporated doing, the C Corp, we might contract from Notional the DAO, right? So as Notional earns more revenue, and let's say there's something more that we want to build, right? Like we request funding from the DAO, right? And so the idea here is that it is the DAO itself, which is sort of the head honcho. It's not Notional, the company. Notional, the company, is just a company that like builds stuff that contributes to this DAO, but it's not like the main thing. The main thing is the DAO itself. Yeah.
Got it. And so when investors put in money, are they thinking to themselves, there'll be a conversion? I guess, how are they envisioning the mechanics of a return? Are they also, let me just stop there and ask you that.
Sure. So when we received investment in those 2 rounds, both of those investment rounds were for company equity. And if so, in the event that the company did issue a governance token, there was an agreement that there would be a pro rata distribution of that token. But like the thing that they were, so, you know, if we were to issue a token, which we did, then the investors would receive a proportional share, but they did not invest in the token. They invested in the equity of the company.
Got it. And so is it right to say, or tell me if this is still unclear, but is it right to say that they're thinking that the company would be sold to another company, and that would be that's typically like how a VC would think, either IPO or sell, and that's how they're making the return? Is that the case here?
I think that, you know, like they might feel like they're going to make some money off the company's equity. They might also feel that in the event that there was a token issued, that perhaps they'd make some money off the token. Mm-hmm. So that's what I would say.
Yeah, okay. It's kind of a combination of the two. I would imagine the token seems like the more exciting part, right? Because it's all about the protocol. Presumably the company, I talked to somebody else about this recently. The name is escaping me, but he was saying that we started this company, we raised some money, but the company is going to one day, hopefully, dissolve into nothingness. And that the protocol becomes so large that it's all about the protocol, and there's developers building on the protocol. So generally, I feel like the structure is, hey, let's create a typical C Corp. Let's raise money for that C Corp, sell equity in that to investors, preferred shared. And then we spend our time building on this protocol. The investors either also own the token that we're building on in the protocol. And so they're effectively, you know, if you think of a foundational, if you think of a foundation's capital, so protocol oftentimes has a foundation for their, you know, investing sometimes hundreds of millions into developers building onto the protocol, because that is how they're building their empire. The investors will say, hey, we want to invest in the early development pool. So, you know, in this case, Notional Finance Inc. is a team of developers building on the protocol. There might be other developers building on the protocol down the road or maybe today, but it's like a spark. You know, you have to somehow spark the fire. And meanwhile, ultimately they're hoping that the price of the tokens goes up, the governance tokens.
Yeah. I think that's
Yeah. It's kind of like you said, people are figuring it out. It is such an unorthodox way when you frame it relative to traditional VC and startup growth, way to raise money and return investment to investors. So I love going down this road because it does create this pathway that other founders can start to really visualize and say, okay, I could see how we could implement this idea, raise money from it, pitch investors. Like, founders already struggle so much to create a pitch deck and pitch investors on their own vision and future and traction and team and everything else, to then layer in kind of an additional level of complexity around it is, it's tricky. So I give you a lot of credit for raising what you have.
It's tricky for sure. But I think at the same time, you know, if you're dealing with sort of crypto native VC guys, it's relatively well established at this point among like a certain set.
So where are you going to go from here? So you have the site's up and running, the protocol is there, you have hundreds of millions on there. Are there things that are like clear and obvious in front of you that you guys are working hard on?
Absolutely. I mean, I think that, given sort of what we like, we're protocol first, right? So we're building a protocol. We're not so much building a traditional business. And that means that growth looks a little differently. Something that we really want to make a point of, and we are, is integrating Notional with other protocols, right? So this is kind of the DeFi equivalent of like a business partnership, right? But what you're doing is like you're having this other protocol lend on Notional, right? So instead of going after a particular user, like just a regular human being, if you can integrate with another protocol, like you get all of their people, right? So it's like there's this vast machine that is DeFi, and you've got a part of it, right? And you build it into the machine, and then it's like just part of the machine.
Mothership.
It's like, yeah. So it's kind of interesting. I don't know.
So are there other protocols? Is it right to say that there's a sort of master level protocol being built or can be built where it's operating somehow behind the scenes, or is it more analogous to software today where there's just direct API integration? So you would have an integration with another protocol directly. Is that kind of, maybe that's phase one at least? Is that kind of your vision? So you segment out, you choose Compound, or I don't know if you've announced that yet or even thought about it, but you pick a protocol and then integrate with them? So
we have already integrated with Compound. So Notional is directly integrated. So every dollar of capital on Notional today, actually vicariously like sits on Compound. So like on the back end, if you will. And we want something similar with other protocols, putting their sort of user funds through their protocol onto Notional. So that's like, yeah, I don't know. Does that answer your question?
I think so. So when you say that there's a pool of capital that people have invested into Notional, that's actually sitting on the Compound. It's sitting on Compound's protocol.
Yeah. So it's part of the way the system is designed, such that so we allow fixed rate lending and borrowing of wrapped Bitcoin, Ether, USDC, DAI. Right now, Notional has so we do not hold cash balances of USDC, DAI, any of those currencies. We hold wrapped cash balances. So we'll take the actual cash and convert it into C tokens, which means that we're lending it on Compound. And then the cash balances that we hold on Notional are denominated in these wrapped tokens.
I see.
So it's like
certificates for I don't want to say stock, but you're not holding the actual cash. You're holding the claim to the cash, to the wrapped tokens.
Yeah, and it like optimizes capital efficiency, right? So anytime you have assets on Notional, they are actually on the back end being lent out. And so you're earning, there's no like dead weight, right? You're always earning interest on your cash that's sitting on Notional.
That's a good way to think about it. Okay, and so you want to continue to do that on other protocols as well?
Yeah, and also from different, like, so that's like we're integrating with them. We want other people to integrate with us. Right. And like the way that might look as like something that we're currently pursuing as an integration with the yield aggregator. So it's basically a yield aggregator. It's like people put their capital in and the protocol goes and finds the best opportunity for that capital. Right. And so we want Notional to like be a opportunity for this yield aggregator so that, it's one in a list that it will check. Right. So should I put my money there, or Notional, right? And then so like when money flows into that yield aggregator, some of it then flows to Notional, right? So it's like, it's like a
it's a yield aggregator is almost like I think of it as a terminal or a transparency tool for pricing, where it's showing you the best place to put your money based on the yields?
Well, it's also doing
Right.
it for you, right? So it's not just showing you, it's doing it. So it's managing your funds and and switching them from place to place as it is optimal to do so.
What's the best place to learn more about this? If someone's going to dive in, is there a dominating yield aggregating protocol out there today?
There is. Yearn Finance is like the dominant one.
Yeah.
And there's also this Convex Finance.
Convex. Are there other people or tools or places that you've learned a lot, or that you'd recommend if people are interested in this to dive deeper?
Yeah, I mean, I think that so if you're interested in using these protocols, so if you want to get some understanding so that you can use this stuff, something like, DeFi Dad, his Twitter handle DeFi Dad. He's a good guy, and he makes really accessible, I would say, sort of videos of how to use these things, right? That are easily understandable. And if you want to learn more about really dive into the nitty gritty, the technical stuff, that's going to take more work. And what you should do is just go to the different protocol websites, read through the documentation, try to build something. There's just no better way than to try and build something.
Yeah. Teddy, man, I appreciate you going down the rabbit hole with me. Usually I'll have conversations, we'll branch off into different topics, but we stayed right on Notional the whole time, and you had me captivated. So congrats, man, on all your progress. Are you active on social? Do you do posting, writing anywhere?
So I occasionally post on Twitter. I'm at Teddy Woodward. And if you want to follow Notional, you can also do that at Notional Finance.
Awesome. Well, wish you the best, man. I'll definitely be following you and hope to have you back on someday.
Okay. Thanks a lot for having me,
brother.
Mike.